All right, and we're back with our end of day post-wave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from postwavetrading.com, home of the world famous post-wave price trigger reports. All right, so it's Thursday, August 24th, and tomorrow is Take Back Friday. We got the couple of things happening. I know we've had I forget what you call it, but the Fed speaking thing, whatever they're doing, that's going on, and jobless claims and all that stuff. I don't know what else is coming out tomorrow, but just be on your toes. It may not be a typical Take Back Friday day. All right. So with that being said, first of all, what up to Russell? What up, man? You say you're down in Cape Breton, Nova Scotia. All right, Nova Scotia. What's up, Nova Scotia? Big shout outs. Thanks for your support. All right. So our first chart here is our Bitcoin futures. Now, let me just start by saying I have made updates to the reports, not changes, just updates where the commentary portion of the reports now speak a lot more clearly. All right. And it's I did that so that it could coincide more with these end of day report videos that we do here. That as you're following along, when you log into your dashboard and when you download or print out your daily reports, you'll be able to see exactly what I was saying in the videos, and you'll know what to do. Everything revolves around two, or should I say three aspects when we're talking about trading the markets. All right. Whether you're trading the markets as a day trader or you're trading the markets as a long term investor, there are three aspects to these markets that you have to take heed of. The first aspect is trend. Is the market trending? If the answer is yes, the next question is it a bull market or is it a bear market? Once you've answered the trend question, the next question you need to ask is where is support and where is resistance? Support and resistance goes way beyond, drawing trend lines on a chart. When we talk about support and resistance, we're talking about the intraday price inflection points, which is a ratio of the put call ratios and taking a look at your price ladders and market depth and level 2 NASDAQ quotes. I mean, you name it. You're looking at a lot of different pieces because it's not just drawing trend lines on a chart, although that can be helpful, but that doesn't tell you, it doesn't even scratch the surface of what's really going on behind the scenes. So then the third aspect of these markets comes down to, in my opinion, the most important aspect, and that is your trend momentum readings. Trend momentum readings are took me over 20 years to develop it, let's put it that way. And the trend momentum readings take a look at all of the above, but then goes into further depth and is a predictive measurement of market behavior and activity. And it also takes into its effect of the historical um, probabilities in the market. So you look at, from a historical perspective, and you look at seasonals. During this time of year, this happens. During that time of year, that happens. It's a very complicated thing, and there's a lot of vegetables that go into that stew. But the trend momentum reading takes all that amalgamation of data and breaks it down to the most minute detail, and that gives you your trend momentum readings. The trend momentum readings tells you where the true real-time money flow of the market is right now. Right now. And with that, it adds an alert function and gives you rally and crash alerts. And in the rally and crash alerts, it gives you what is called positive and negative bot checks. And these positive and or negative bot checks alert you to the idea that large money is moving funny in the market, and they are preparing for a particular move in a particular direction. So the bot checks as represented in your Postwave reports on your dashboard is under the positive and negative 411 readings. If you get a negative or positive 401, it's telling you that that is a positive or negative bot check. Positive bot checks is an alert that a big upsurge is about to happen in the market. Pent up energy. Someone just went in and bought, 10,000 calls or something like that. And the negative bot checks is the same thing in reverse. It's letting you know that a big down leg, a big down move is coming. Someone has built up a massive position in that particular direction, and it's inevitable. It's coming. Now, positive, negative bot checks are slightly different than rally and crash alerts. Rally and crash alerts is an immediate. It's more immediate. It's saying that within the next 3 to 5 trading days, the market is going to move in this direction. All right. The positive and negative bot checks say it's not just that there's going to be a move in this direction, but it's going to be a big move in this direction. Okay. So if you take a look at this Bitcoin futures chart, you see right here, you see this red diamond. All right. That is a 411 as listed on your Postwave reports on your dashboard. And that negative bot check is saying, hey, you don't know this, but big players are getting together and they're about to hit this market hard. And there's a big down leg coming. So you better prepare yourself. And when it told you this, the market was at 29,000. Well, it looked like it was never going to come, right? 2 weeks went by. Then all of a sudden, here's the big down move. And the market fell thousands of points because the negative bot check told you that was coming. In addition to the negative bot check, even before that, you had your crash alerts here and here that said, hey, inevitable, immediate down move coming. And that's what it alerts you to. But then the bot check takes not only what the crash alert is saying, but it magnifies and said, not just is the market about to move in a down direction, but it's about to move there hard. And then we got this bot check, then you got this crash alert here, and then boom. All right, so that's how that works. So as of right now, believe it or not saying that the crisis is averted, but what I am saying is that we had a rally alert coming into today. We didn't get any upside production at all, but that's okay. This is just day one. Rally and crash alerts lead the market 3 to 5 days out on average. But there are a lot of times too where the market will move in that direction within 24 hours. All right, so that's not uncommon either. We have a bullish trend momentum reading right now in the Bitcoin future. So what does that mean? It means that you are looking and preparing for buying opportunities once the intraday price inflection points have been reached. And on your report on the dashboard at postwavetrading.com, it gives you those numbers. You always want to enter the market at the price inflection point. No matter how low the number is, no matter how high the number is, you always want to enter the market at the intraday price inflection point. And that corresponds to the daily price trigger and the intraday price trigger. All right. It's an intraday price inflection points. It is paramount. I cannot stress enough why you need to do this, because there is something about these price inflection points that this is the number you want to be in the market at. No other number. And there's a reason behind that. And you notice it once you get in the market at the intraday price inflection point, whatever ebbs and flows in the market come, you'll notice that you end up being at the actual number that matters the most in the market. It would take me all day to explain to you why that is. It just is. Just take it for what it is. If the report is saying do not buy this market until it hits this number, believe it. I don't care if it takes a month for the market to do that. You don't do anything. You don't enter that market until it happens, until the price inflection point is hit. If it is not, then you are not in that market. That's what it is. Capiche? All right, moving on. That's why I say the system works if you work the system. Patience is key. Then once you're in the trade, let the trades develop. Sometimes the market is going to act like a bucking bronco and toss you all around and throw you up in the air and all that. But trust, you're not going to fall off that horse. It is less than 1% of the time that you are stopped out of the market on a loss. Less than 1% of the time. And that's because we are trend followers. We ride a trend until it is over. It doesn't matter if the trend lasts a week or if the trend lasts a month or if the trend lasts a year. We're riding that entire trend until it is played out. How do we do that? We do it with the trend momentum readings. Get long here, get short here. Get long here, get short here. Get long here, get short here. Wash, rinse, repeat. Or if you're like, I don't like shorting the markets, fine. Get long here, take profit here. 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 All right? It's just that simple. I don't care what the market is that you're trading. I don't care if it's stocks. I don't care if it's forex or commodity futures. I don't care what it is. All right? Crypto doesn't matter. This is the science to the markets. All right? You are not going to have long-term consistent success in these markets without these tools. Point blank, period, end of discussion. It's just a fact. I didn't make the rules. The market makes its rules. I just follow them and profit therewith. All right. So that's how that works. All right. Moving on. This is XRP Ripple. As you can see, after the big hyper super parabolic bar, it gave it all back and now is struggling to get in. So we had a rally alert, no upside production yet, but the market is still trying. All right. Just day 2, going into day 3, bullish trend momentum reading. Wait for the price inflection points and do what you need to do. Next up is wheat futures. I am still patiently waiting for the wheat futures. All right. I am waiting for the market to trigger and do what it's going to do. So far, we have nothing. The market is really struggling to get this bear market rally technical bounce going. It is struggling. Had the rally alert back here, and we haven't gotten any upside production, so still waiting. But once it gets started, we know it's going to come up here to at least a 664, 665 level. So it's going to be a nice run when and if it can ever get started. But we got a bullish trend momentum reading, so we're going to wait patiently for the market to do what it does. Sometimes it takes a while. We're at 1, 2, 3, 4 days. So tomorrow will be the 5th day if it does not trigger. All right. On rare occasions, sometimes you can get these rally alerts and the market will refuse to do anything, or it may flip-flop on you. That's fine too, because the system is designed to help filter out false signals and bad trades. It's not 100% because nothing can filter 100%. but it's pretty darn close. Close as you're going to get, put it that way. Like here, you had this rally alert bar here. Market gave you upside production. And then on the next day, it just said, okay, I'm flip-flopping now. I want to be bearish. So it kicks you out of your long position. You get short, and then you make it all back, and then some. That's just the nature of the beast, the nature of the markets. So wheat, we're still waiting. Bullish trend momentum reading. So we're only looking for buying opportunities. Next up, we have soybeans. Soybean still has a bearish trend momentum reading. So you're still in the sell the rally mode. Bearish trend momentum readings is sell the rally mode. You're selling rallies. All right. Bullish trend momentum readings is you're buying the pullbacks. Okay. So as you can see, this market is in sell the rally mode, and we're just waiting for the next leg down. We're waiting for it to come. Next up, we have corn. Now, oh, by the way, that soybeans was it's in a locked-in bear market. All right, so here's corn. I think I may have put in a wrong number here because this shows more than $1 gap up, and that did not happen. If it happened, I would have known it. So give me just a second to fix that. Yep, here we go. Yep, that's on me. Let me fix it. Let me fix it. I messed up on that one. So I need to fix it real quick. Just take a second. All right, hold on. Let me go back. Sometimes keying errors can happen. It's part of comes with the territory. All right, so yep, I put in wheat. I put in today's wheat price in the corn price. So let me fix that. All right, so corn is at okay. All right. Let's see. All right. And all right. And all right. We should be good to go now. We'll let the chart refresh itself here. All right, here we go. So this is more like it. So this is corn. Corn has a bullish trend momentum reading as well. Make this a little bit clearer. So we had the rally alert on this one. Got the initial upside production, then the market pulls back and kind of moves sideways a little bit, but still trying to get something going. So as long as you got a bullish trend momentum reading, I think the market will eventually get up here to the 540, and we'll just you're just holding that. If you got long, you're just holding it, waiting for the trade to develop. You got your stops in place, you're good to go. Next up is silver. Now here's silver. Silver took a breather today. You got a bullish trend momentum reading. You had this big parabolic run up yesterday, and now the market's taking a little bit of break, trying to catch its breath and waiting to do something. So today is a pullback day. All right. So this may be giving people a chance to get in who missed the rally alert. You know, that's why these rally alerts are here, to let you know when the market's getting ready to do something. And then you got the bullish trend momentum reading as your confirmation. So this market looks like it wants to run and break 25 and get in maybe 26, 27. So this one is looking wide open still. I like this one on the long side. Looking at nat gas just did it. It has done it again. Gone neutral. Neutral for tomorrow's trading. You're still in a locked-in bear market, and nothing has changed. Nat gas just cannot get out of its own way. Next up is your Dow futures. You have a bearish trend momentum reading, and the market is still headed down. Big down day to day. Hit the bottom of the Kumo cloud, stopping short, testing that 34,000 level we've been talking about. And if once it breaks below the Kumo cloud, it is in free fall status. So get ready for that. Next up is the NASDAQ 100 crash alert for tonight into tomorrow's trading. We have a bearish trend momentum reading. This thing is looking like it's threatening to get right outside of the cloud. Had a big run up today and then just a collapse. So I hope you're ready. This thing is looking like once this NASDAQ drops below the Kumo cloud, it's going to be just a bonkers turn of events to the downside. All right, gold. Gold right now still has a bearish trend momentum reading, and it's still in a free fall status. It's below the Kumo cloud, and it is struggling. It doesn't want to break 1900, but it's going to, ladies and gentlemen. Get ready. Next up is the S&P 500. No, say it ain't so. Bulls are in trouble. We got a bearish trend momentum reading with a bot check for today. Negative bot check on the S&P 500 just as the market comes down, reaches down and touches the bottom of the Kumo cloud support. This is an ominous sign, ladies and gentlemen. We got a big red diamond right here telling you that a big, massive down leg is coming in the S&P 500. It's about to be time to back up the truck, ladies and gentlemen. I hope you are ready. This is no joke. This is a red alert. Red alert in the S&P 500. This is the futures contract, and we have a negative bot check saying that this market is playing a dangerous game right now. Once it goes below the Kumo cloud, it goes into free fall status. There's no support. There is no support once it drops below the Kumo cloud. No support. No support. All right. I don't know what the catalyst is going to be, if there even be one, but just from a technical standpoint, the market is about to drop and drop hard. Be ready. Next up is crude oil futures. And you can see here we got a bearish trend momentum reading, and the market is still falling. All right. We've already broke the 80 mark. And then we broke 78. Now the market's on its way to coming down to the 75. All right. That is a key downside target. Once we hit 75, then we'll see how the market behaves. But I think 70 will be in the cards once we hit 75. So bearishness abounds. Next up is the euro. It's already in free fall status, bearish trend momentum reading, and it's still in drop mode. Next up is the pound sterling, bearish trend momentum reading. It is in a free fall status right now as well. Next up is the Aussie. It still has a bullish trend momentum reading. It is bucking the trend on the other two and wants to continue to garner a bear market rally. Now, it's not getting a lot of help though. So I don't know. I mean, I gotta stick with the system here. So it says bullish trend momentum reading. So we gotta let that do what it's gonna do. I think the market will come back up here to 66 though. So gotta stick with that until it doesn't. Next up is the Russell. No, say it ain't so. The Russell has a negative bot check. Big red diamond. Looking like the S&P 500, and it already dropped below the Kumo cloud. It's in free fall status. This is going to be a hard and fast move down to 1700. We got a possible 150 plus point drop coming in the Russell. Get ready, folks. This looks nasty. All right? Get ready. It's right here. Can't make this stuff up. Bearish trend momentum reading. We got crash alerts abounding. Next up is copper. Copper still in a locked-in bear market with a crash alert for tonight into tomorrow's trading. Next is the Ethereum futures bullish trend momentum reading. No upside production as of yet. The market is trying to do a little something. I think we will get that technical bounce back up to 1800. It is definitely possible, just like Bitcoins, and they're moving in tandem together now. So I think it's going to do it. I think we got this bullish trend momentum reading. We got this rally alert. Today was just day one. Let's see what the market does. Now, when we talk about Bitcoin Ethereum futures, bear in mind that the cash market never closes. So therefore, a Friday for crypto is from Thursday evening at 6 p.m. until Sunday night at 6 p.m. So Bitcoin and Ethereum have until Sunday night, 6 p.m. Eastern Standard New York time to show us what they're going to do. And then we'll know what we can expect for markets. All right. All right. Yeah, I see your loco. I got you covered. What's up to our people in the land down under? Let's take a look at the ASX. It was on the Australia exchange. See what's pumping. All right. So the first one you want to see is S32. Yep, I got you. Say less. Here we go. Then I got a surprise chart I want to show you guys. All right. All right. Here's your S32. And you have, oh, you're neutralized here, my man. All right, so you're neutralizing your S32, but you know you're in a bear market. You're in a locked-in bear market. It tried to do something here. It tried to get a bear market rally going, but it failed. As you got here, you got only a smidgen of upside production. But wait, hold on. All right, let's be clear. You got a positive bot check right here. All right. The last time you got one was back here. You did get a up run, but it didn't last because you were neutralized. When you're in a neutralized position, it's hard to get the market to do anything. That's why typically I try not to trade the neutralized markets, but I will from time to time because it's there, right? You trade it because it's there. Now, the last negative bot checks you got, you did get that big down leg. So perhaps this time you'll get a big up leg. But it's neutralized now, so we'll have to wait and see what materializes on that. But it's neutralized and it's still in a locked-in bear market. All right, and let's see the next one. Oh, you want to see MXC? That's the MGC Pharmaceuticals, I believe. Yep. All right, let's see MXC. I keep typing the wrong thing. Yep, MGC Pharmaceuticals. I remember that one. All right, let's see. Yeah, I know it was tight. Village Green says that was a tight cloud squeeze. Yes, it was, my man. Yes, it was. All right, so haven't looked at this one in a while. All right, so this one is also in a bear market, as you know, locked in bear market, and you've had a lot of whipsawing action in here, right? This is one of those weird markets. It's a penny stock for one, so it's prone to just a lot of whatever. Truthfully speaking, there's not a whole lot you can do on this one. It's been in a bear market for a while. Let me see if I can try to pull up the weekly. Sometimes the charts will get a little funky. Yeah, this market really has been jammed up for a long time since 2021, February of 2021. When it had this big run up for the month, and then the market has just been steadily heading down. It's dropped from this mark here of was it 12 cents, 13 cents. So it's fallen from 13 cents to less than a penny. So this one is just kind of dead in the water unless something happens. I just don't see anyone really caring about this one a whole lot. Hopefully you're not, long. If you are long, hopefully you got long here and not up here. But yeah, that's it on that one, my man. All right, now let's take a look at what everyone's been talking about. This is the one that everyone's been talking about. Let me show you how the pulse waves do on this. because it's very important to see what's been going on. Now, this is on the reports. This is a security on the Postwave reports. All right, and hold on. Okay, let me get this out of here. All right. All right, folks. This is NVIDIA. The big talk of the town, the blowout earnings reports, and all that other jazz, hitting new 52-week highs, the stock, breaking $500 a share, but it didn't close at 500. It closed below 500. All right, that's technically a crash into the close after hitting a new fresh 52-week high. Look at the behavior of the market. Case in point, you had a bearish trend momentum reading. The market was in the sell the rally mode. It had its little correction. Then it came off of that and gave you a bullish trend momentum reading with the rally alert. Then the market explodes. Like I said, you trade the rally alerts because the rally alerts take all the other stuff into consideration: support, resistance, trend, all that. But we still have this issue that people have been disregarding, like it doesn't matter, like this time is different. And that's this gap back here that I was warning you about from the week of May the 25th of this year. Big old gap. Never pulled back and filled this gap. So at some point, the stock is going to have to drop way down here to $350 a share, somewhere in the neighborhoods of $350 a share to fill this gap. At some point, it's going to have to do it, whether it likes it or not, whether it wants to do it or not. All right. So I implore you to be ready for that. Right now, you're still in the sell. You're still in the buy the pullback mode. I'm sure as this thing comes down and tests the trend line, which is the top of the Kumo cloud, it'll probably bounce off of it and bounce again. People are going to get in here and defend this and get long because you're in the buy the pullback mode. They're just waiting for the pullback. Today represents a pullback, and people are going to try to take advantage of it. And that's fine and good. But you need the Postways to tell you specifically and strategically how to get in these markets and how to get out of these markets. But here's the mighty NVIDIA. Just remember, no matter how high it goes, I don't care if it goes to $5,000 a share, at some point it's coming down here and fill this gap. This gap will be closed. All right, at some point. All right, I just wanted to show you that because I don't want you to forget it. Know that I showed you that. Again, I reminded you of that gap on this day. Another one people has been talking about is Microsoft. So let's go ahead and pull up the Microsoft. And I'll show you this one. I'll show you what thus saith the pulse waves. And then we're going to also take a look at Meta, because they've been talking about Meta. All right, I want you to see that one. And then another one that people have been talking about is this one. All right, hold on. So we'll look at this one. And then we're going to look at this one. All right. And then we're going to look at this last one here. And I'll throw this one in for good measure, just to have something to compare it all with. All right. Now that we got all these here, let's go ahead and look at our final charts of today. All right. So the first one here is Microsoft, the mighty Microsoft. It is already dropped below the Kumo cloud of its bull market. It's already hit a top. It's already topped out. You had your bearish trend momentum reading. You had this big correction. Now you have a bullish trend momentum reading. Had your little rally back up to the bottom of the Kumo cloud, and then the market sold off into the close and failed. You see how similar this looks to the Nvidia. The last 5 days of Nvidia is the same. The market sold off into the close. I wanted you to see that for a reason. You get it? It's starting to sink in. All right. Next up, we're going to look at is Meta. Take a look at your Meta. Now, Meta hasn't, collapsed as much as the Microsoft, but it's the similar pattern. Look at the last 5 days. It's the same price pattern with a crash into the close, back into the Kumo cloud, but you still have a bullish trend momentum reading, so it's still hope. I'm not saying they're done or they're dead yet because you got a bullish trend momentum reading. The market is still trying to do a recovery rally. All right. Off of this bearish trend momentum reading that made the stocks take a beating. All right. Now, these tech stocks, as you can see, the market is pretending as if the market is made up of only these stocks that I'm showing you now, and no other stocks exist, no other companies exist, just these. Again, last 5 days of trading, what do you got here? A crash into the close under the auspices of a bullish trend momentum reading where they're saying, we're not giving up hope. We see a technical bounce coming for the market. I'm just saying, I'm showing you this for a reason. Take heed to it. Here's Alphabet, known as Google. Now, totally different. All right. It has been neutralized as 52 weeks. And at first, this was a bearish trend momentum reading that became neutralized because the market couldn't do anything. So you had the initial down, then you had the 2 negative bot checks came down, and then the market now is saying, okay, I'm done. All right. You had this gap that the market came up, and then it came down here to close this gap. And then it surged back up again, and now it's ready to come back down again. All right. So just showing you what's going on in the tech sector, what's going on with this whole AI craze. Here's another one. Amazon had the big, huge gap up, closed the gap, bearish trend momentum reading. You had the negative bot check, had the big down leg, as was predicted by the bot check. Now you got a trading. Why? Because this market also crashed into today's close, into closing bell. And then last but not least, for good measure, here's Intel. Intel has a bullish momentum reading, but it too crashed into today's close, and it's trying to also say we're still in the buy the dip, buy the pullback mode, buy the correction mode. So we're going to defend the bottom of the Kumo cloud support at $32. We're going to defend that $32 support, and hopefully we can stage a comeback rally. So this is where we are right now, ladies and gentlemen. Now, why did I show you these tech charts? I showed you them for a reason. The reason being is because these markets crashed into the close. I'm thinking that we're about to switch off from the bullish trend momentum reading back to a bearish one. And then that is what's going to push the NASDAQ 100 futures over the edge. And then all the stock indices will be collapsing simultaneously, and there will be mayhem. So watch these to see over the next week, next 5 days, what happens. Microsoft, Meta, Apple, Google, Amazon, Intel, and Nvidia. All right, these are the 7 that, as far as the market is concerned, the 7 stocks that only exist in the world. No other stocks exist in the United States of America but these stocks. All the other companies have been rolled up into these companies. All right, doesn't matter what those other companies did or what they don't do. They've been Googled. All right, so these are your shares. These are your stocks that people care about right now. These 7. All right, the magic 7. These are it. They don't care about any other stocks. So, with that being said, get ready, folks, because I think next week is going to be pretty explosive. It doesn't. We don't even need any data to come out. I think the technicals on the charts are going to do all the legwork themselves. They don't need a story. It's just going to happen because the markets are ready for it to happen, if that makes any sense to you. All right, folks, with that being said, remember, the system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And with that, I'm out. Smash that like button. Have a great weekend. Peace.